Good morning. It's Thursday, the 8th of October. I'm Greg McKenna, and here's your overnight market wrap. It's been a better night for stocks in the US with some decent rallies of around 1%, just a little bit under, which proves that markets are continuing to heal. We've seen commodity prices rise, although oil hit the top of its range last night. Commodity currencies are rallying. The Aussie's above 72 cents. We've got emerging market currencies bouncing back. So the markets are healing, or at least they look to be healing. I'd argue essentially what we've seen, and I know I've said this almost every day for the last 2 or 3 weeks, essentially what we've seen is August crash, September uncertainty, nervousness, fear, test the low, 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 held consistently. We had some nice ranges. We're now breaking higher and looking for topside resistance. Now, we found it in oil last night, and I'll share with you a chart of oil today from my Business Insider report from early this morning. And let me just get that up. Sorry about this. I should have had this one ready. Where's my Hangout gone? Hangout. Sorry. Right. So let's share the screen. All right, here it is. So what we've got is this is from investing.com, and the reason I've used this and not my normal MT4 chart is that this really does show you nicely what we've seen. So we've seen this massive rally here in the price of NYMEX crude and obviously energy per se around the town. And what you've got is you've got this nice big range. So we've had a crash, boom, massive rally. You know, we had that massive rally of, what was it? It was like $10 or something. And so then we've come down, bounced, and now we've had what looks like a failed break. Now, whether or not what's going to happen going forward, as Alexander Elder likes to say, you make your trades at the right-hand side of the screen, and then you find out when that trade's in the middle of the screen how it's going to look. But for the moment, last night's high looks to me as the level to watch in crude oil markets. And with crude oil, partly I'm not getting overly excited, but one thing I would say is if I look at the Aussie, it's had a nice little W pattern. There's so many nice little W patterns that, you know, we're back in the 72 region. It's struggling a little bit here. Ran into a little bit of resistance last night around the same time that oil was topping out. I still think it's going to test into that 72, 70, 73 cent region, which is of course where the high was a week or so ago, and then we'll have a look at it from there. The S&P's got a similar W pattern. It couldn't get through 2,000 last night, and it's resting. Sorry, that's silver I'm looking at there, and it's resting on that level. If it can get up towards 2020 or something like that, I wouldn't be surprised over the next couple of days. Tomorrow night, or tomorrow morning our time, tomorrow night or tonight US time, aftermarket Alcoa will be the first of the companies to release their earnings for the season. My sense is that there's a lot of really bad news priced into the market. And this morning in my Business Insider report, I highlighted a story that I picked up from the Financial Times, which was that, you know, don't get caught on the bear trade effectively. And what it said was, is the IMF's warning on downloaded growth. Everyone's worried about US interest rates. People are worried about poor earnings. They're worried about the US dollar and all that kind of stuff. And whilst John Author, who's a great journo at the FT, has said that we need to hold tight because the strong dollar and lack of guidance could make it a bumpy ride, what this other author in the FT had to say was that the bear trade, or the risk-off trade, or the let's be in cash trade, is a relatively full trade at the moment. So that's why, you know, a move through 2020 on the S&P, you know, could be an important move. That's why if Alcoa and other companies start to print results and reports that are stronger than the market expected, then you really could see a move higher. And that's kind of the way we're set up. Now, of course, I could be completely wrong. maybe all the bad news isn't priced in. Maybe we could get a really weak earnings season. I have no idea. But my sense is that the balance of risks, if I could call it that, is slightly skewed toward the market getting a shock that could see prices run a bit higher. Now, from my point of view, all this healing that I've talked about, these bounces that are possible, are really just part of the overall topping process in the S&P 500 and in a number of other equity markets. But that doesn't mean that counter-trend rallies aren't still consistent with that type of process. Upside volatility is still volatility. Anyway, getting back to the overnight moves. Of course, with markets healing, that means bonds are up a little bit, and we saw US 10s move up to about 207. We also saw, which is really interesting, we know that non-farm payrolls last week was weak, but last night we saw house prices higher in the US, and we also saw mortgage applications up. So, the US mortgage, MBA mortgage applications index lifted to 534.2. That's the highest level in 8 months. Balancing that out, consumer credit was $3 billion less than expected. That's a big percentage miss on that one, with 16 billion print instead of 19. So it continues to be a really uncertain period about the US economy. I still think it's difficult for the Fed to ease. That said, last night the euro struggled and sterling did well. So lots of the correlations are breaking down. We're seeing the Aussie rally. Kiwi did phenomenally last night. The Canadian dollar's backed off. It had 4 or 5 sessions of wins. And it's backed off a bit. The Aussie will probably back off a bit today, although China's back from their holiday, and I would think that Shanghai's got some catch up to do, and that there could be significant rallies in Shanghai, which will help the ASX and help the Aussie dollar as risk sentiment really kind of amps up and picks up. Things were very different before China went on holidays. We were worried about weak Chinese growth and that kind of thing. But now, as they come back, the sentiment's a lot better. Non-farm payrolls has taken the pressure off the Fed. So I think we could end up having a really good 24 hours for risk appetite over the next day or so. So we'll see what happens. On the data front, nothing in Australia. Japan, we've got some second-tier economic data, including foreign investment, BOJ survey machinery orders. German trade's out tonight. That'll be interesting. And the Bank of England has a rates decision. So that's probably the key thing. The US, we get the minutes from the last Fed meeting. So we're going to be poring over those and seeing if there's any information in that. So another good day. Aussie probably take a rest today. I'm looking to probably buy it on a dip for it to rally from 71.70, 71.80, maybe a cent, something like that. Back up to that 72.70, 73 cents region. Oil, I think, is going to continue to pull back a little bit, but then it'll have another go at that high from last night. And stocks, I think, probably look good for the next day or so. Anyway, that's it from me. I'll be back tomorrow morning on Friday morning with my morning report. So have a good day's trade. I hope you make plenty of money. I'm Greg McKenna. Bye for now.